Imagine rolling out AI to like 19,000 employees and letting an autonomous agent handle your highly sensitive payroll calls with near 100% accuracy.
Yeah, it sounds completely like science fiction, honestly.
Right. But Paychex actually just did it. So a warm welcome to everyone, and thank you so much for coming to watch the video today. We are going to unpack how this human capital management giant is, navigating a cautious economy while swallowing a massive acquisition.
It is a totally fascinating balancing act. I mean, looking at the Q2 fiscal 2026 presentation, the financials are just solid. Revenue hit $1.6 billion.
Which is what, up 18% year over year?
Exactly, yeah. And adjusted earnings per share grew 11% to $1.26.
Hmm.
A lot of that is driven by the Paycor integration, which is actually running way ahead of schedule.
Oh, wow.
Yeah, they even raised their cost synergy targets from $80 million to $100 million.
Mm-hmm.
But there is a pretty interesting guidance shift here. They raised EPS guidance to 10 or 11%, but warned that revenue will likely hit the low end of their range.
Which kind of begs the question, why the disconnect?
Right, so it basically comes down to cost-conscious clients.
Mhm.
Businesses are actively hunting for value right now, opting for smaller upfront deals. But the big PEO business is actually exceeding expectations entirely.
Okay, wait, just to clarify for you watching, PEO is Professional Employer Organization. Basically where Paychex steps in and acts as the official full-service HR department for a smaller company.
Yeah, and that segment is booming.
Mm.
And that ties directly into their aggressive AI push. Like I mentioned, they deployed Gen AI to all 19,000 employees.
Which is wild. It sounds like they are upgrading a car's engine while driving down the highway at 80 miles an hour, like swallowing the massive Paycor acquisition, the new engine, while injecting AI to keep the whole machine running. But are these AI tools just a sneaky way to cut costs, or do they genuinely change what they're selling to you as a client?
Well, that was the exact tension of the Q&A session. Brian Bergen at TD Cowen asked about that lowered revenue guide.
Right, driven by those smaller deal sizes as clients look for value.
Yeah. And Brian Keene with Citi followed up on whether that managed services softness was a macroeconomy problem or a competitive issue. Management said it is purely macro.
So prospects are just shopping carefully.
Exactly. And Tien-Tsin Huang at JP Morgan asked if they would change pricing or packaging because of that hesitancy.
Did they say yes?
No. They said their current bundles provide enough flexibility and their fixed fee pricing remains a huge competitive advantage. Samad Samana at Jefferies also checked if this guidance adjustment was purely fundamental.
And I'm guessing it is.
Yeah, driven by smaller deals and some agency headwinds, but they noted price realization within the existing client base remains really strong.
Okay, so existing clients are still paying for value. Kartik Mehta at North Coast Research asked about that exact dynamic, didn't he?
He did. How to reconcile cost-conscious prospects with strong pricing. And he also asked about share buybacks, which management said were just opportunistic based on the stock price.
Got it. What about the AI cost synergies, though?
Markin from Baird and Andrew Nicholas at William Blair really dug into that. Mark asked about Paycor's growth optics, which grew 8 to 9% pro forma, by the way, and how AI helps them scale without adding proportionate headcount.
So AI handles the routine stuff, right?
Exactly. Andrew asked about that too. And management explained, AI frees up staff to act as high-value advisors. Plus, they're seeing strong traction cross-selling PEO to Paycor clients.
That makes a lot of sense. Did anyone ask about when they actually start monetizing the AI?
Yeah, Will Chu, stepping in for Ashish Subhadra at RBC Capital Markets, asked exactly that. Right now, AI just boosts retention, but eventually it will power premium standalone features like compensation insights.
Oh, so they will charge extra for that eventually.
Right. And Scott Wurtzel from Wolfe Research asked about the AI sales engine and Q3 revenue guidance.
Are they expecting an acceleration?
They are, specifically in the back half of the year. The AI sales engine is fully deployed and the sales reps apparently love it. Jason Kupferberg at Wells Fargo also asked about acceleration factors for management solutions and PEO.
Because they're lapping those old integration headwinds.
Exactly. All those hurdles and enrollment issues from last year are mostly behind them. Oh, and James Fawcett at Morgan Stanley asked about investment gains and go-to-market territory resets.
Right, the financial shuffling.
Yeah, they basically rebalanced their investment duration for gains, and the sales disruption from the merger is basically done.
Okay, so to wrap this all up at a high level, Paychex is successfully digesting this massive Paycor acquisition.
Yeah, and using AI to drive massive internal efficiencies to protect their margins.
Right, even with a cautious macro environment making new clients hesitant to sign large deals up front. Which leaves you with this provocative thought. As AI seamlessly handles all the routine tasks like payroll calls, does the true premium in business software actually become the human advisory element?
It is a great question to think about.
It really is. Thank you so much for watching. If you enjoyed this video, please click like, share the video, subscribe, and stay tuned for upcoming content.